Here we are. This is called the Nasdaq comp. And once again, with high price action volatility MMTs, is that this long green line on the Nasdaq comp, it's a long ass uptrend on the Nasdaq comp, started way back over here in 2009. When that green line stopped going down and it got flat, we were buying down here long before it triggered people in the market. They'd given up that much of the move. But that's how people, it's the only way the public can make decisions on it. So it's very important to understand, the long-term trend between the current bear and bull, where when we have this reversal top right here, now we know that the green line is a long-term 2009 trend. We sold off because we were extremely overbought, but here's what's going to happen is there's the top that we called right there. There's the moving average. We undercut it by a certain percent level. Now, between this time frame, what happens during this week, today's being Friday, and it's a Russell 2000 rebalancing yearly and 1000 rebalancing with a weekly expiration. Now, when you work with price volatility, institutional traders and hedge fund managers are going to be looking at these lines. So when you were below it, the bear was quite happy. But then what happened was we gapped up above that and the bears bought to cover, and you got a huge move on the 21st right here. Okay, yesterday we had gapped down below it, and what happened was the same thing is because it's such a long-term trend line, and it's been flirting with it now for several days. This is where that big bull and bear trade, short seller and bull buyer, buy to cover. The bear bought to cover yesterday when it didn't keep failing, and he was forced to buy to cover, and we had that big up move yesterday. Now, it is a very long-term constructive moving averages that these bigger institutional people are going to be watching. The red line over here is a 20-day simple moving average that's going down, but you are flattening out and you're rising on that long-term simple 200-day moving averages where these people are making their decisions. And when they don't work, you get that big price volatility, and it's called a short cover rally. Short cover rally. When the bear, the big institutional bear, has to buy to cover because it's not going his way and it's a standard protocol, well, hey, I let it keep going as long as I stay below that green line. But the minute that you get a gap up, open, and volatility headline or whatever, bam, summer rally started on the 21st. Yesterday, big gap down below it. They came right in and you got above it. Now we're going to come back down and test it. Now, the key factor is, MMTs, when you come down and test it and it doesn't sell through and it starts to bounce again, that means stocks like Apple, Amazon, some of the other leadership that's in that Nasdaq 100, they're going to be the ones that bounce. Because if it wasn't for them bouncing, it's the stocks. The leadership stocks is what causes these bounces back above these key moving averages, MMTs. And this is where that extreme bear and bull fight's in play, right here. It's all right here. And the thing about it is, that's why the price volatility is increased. Because when it doesn't, and they'll put another run on it, because let me show you something. We were down almost 100 points here. Nasdaq comp remains strong at that test, no matter what. If we sell through it, we get short. If it doesn't sell through, that means that that bear is going to have to cover. That means that we'll ride that short cover rally up again for the third or fourth time we've done it. Is that understanding what this means in here and understanding the leadership in there and why they bounce. Remember that when you got down here, we said we were short-term oversold. And 1 day, 2 day, 3 day, 4 day, today's being 5 trading days. And you've got 3 out of 5 here versus 2 down days. And the bear, on the other hand, the short seller bear, if he doesn't break below through here, he's going to buy to cover, and that's going to be the price action upside volatility. Let it be known here and now.